Over the years, interest has been going up and down, and you might be one of those people who buy real estate using the bank's money, we call other people's money. And what is really the impact on these interests if they are to spike at any given time? And I get to investigate this topic a little bit deeper because somebody asked the question. Actually, around about 9 people asked the question to say, TJ, what is the impact of interest rate hikes on property investment in South Africa? So that's a very common question that you have asked, and we are going to answer it today. If we are meeting for the first time, my name is TJ, your host, and I'm a former banker and founder here at the TJ Tribe. And I do business with a focus in student accommodation, flips, which is buy and sell, and coaching, with the hope that all of us, as young, upcoming modern parents, we can be able to have passive income from real estate. Welcome to the channel. I just want us to look at the stats of real estate, and I thought let me look in the last maybe 40 years what the interest has been like. Right, in the last 40 years, interest rates has been it's been like this. But I'm going to show you a slide here. It started off in the sort of like 10%, and it rose all the way to around about early 1980, 81, 82 to 16%, and around about in 85 or so, it rose all the way to around about 23%. And it came down in the just below before the 1990s to around about 8% again. I wonder what was happening in there. Maybe we could dive in. Those of you who are a little bit on the research side, you can tell us what was happening to the economy there. However, in 1990, it shoot up again to 18%. So some of you thinking, interest rate will never do that. Here's an example. It shot up in a period of 5 years, right below, just before 1990 to 1992. It shot up to around about 18%. Right? It came down again in the mid 95 to around about 10%, and in 2000 it spiked again to 20%, 22%, and ever since then, we've been seeing a decline with a slightly increase. I think with the other increase that we got was around about 2003. It got to around about 13%. I hadn't started doing some investments at the time. I was just still, trying to figure out young adulting at that time. And around about 2005, it went down to around about 8%. Great, yeah, I think it was. And then soon after that, just before the World Cup, in 2010, we hosted the World Cup for the Soccer World Cup. Kinako, we used to call it back in the days. Awesome, Vuvuzela back in the days. Yeah, it was amazing. And in 2010, just before 2010, it went all the way to 12%, came down in 2010 to around about a 7%. 2014 it came to around about 4%, and in recent times in 2020 the cost of money was sitting at an all-time low at 3%. It says here in 2020 I was already doing a business in this time, but we remember why this happened, right? It was because of COVID, and it has now gone up to all the way to around about 10%, just below 10% there, we can see. But here is the thing, right? I just want to say to ourselves, this is the cost of borrowing, right? We then get it at a prime. This is just the prime rates that I was talking about. Then different banks would add on their prime plus 1, plus 2, plus 3. The worst I've ever paid is a prime plus 4. But you might also have other products that you may have. For instance, a credit card could be a prime plus 5 dependent. A personal loan could be a plus 5. What other products do I know? Bank products. Overdraft could be a plus 8. right? Just double check all of these products as and when. This is over and above. Like for instance, we saying the prime rate, it could be 8%, 8% plus another 8 on top of that, right? So depending obviously on your risk, the bank would also give you. So the question that now we understand where we're coming from over the years. I'm sure we can already see there what is the impact. The impact is that obviously, number one, the borrowing cost becomes higher. Imagine back in the days when interest rates was 20%, so you were paying very much close to around about 30% on doing just borrowing money. It's just shocking. Many African countries are in this space. There's a few countries that I know their borrowing cost from the banks is within that range of the 20-30%. So in our country, South Africa, we are highly privileged because our borrowing cost is on the low, so which means that we can go out there and do business. So if you are in the business of real estate and your borrowing cost is that high, imagine now, can you afford it? With what you have bought right now, and if you're not making a good return, will you be able to survive if the interest rate is to go that high? Because that's the highest that we have seen in our lifetime, right? I've just gone back all the way to 1980. I could have gone to around about 70s, 80s, 70s and 60s, but I decided let me do in the 80s to now. That's about a range of 40, 45 years. And many of us, we are within the range, in the age group of around about 30 to around about 55. So we have lived these times, either with our parents or doing adulting. So obviously we are familiar with these times. And by the way, don't forget, this is the month of March. We are still running our competition. There's a few books on stake to be won. And all you need to do is to type in the comment March and then something else in front of it. And you can say March, I've learned a lot today, TJ. Or you can say March, whatever that you want to say. And within that, we will have a competition in the first. We'll draw the results in the first week of April, and we will then mention. We'll have a special video where we mention the winners. But above that, obviously, you need to be here for you to know that you have won. It's the only way we can let you know, and then we'll give you some instructions on what to do. So that we can send these books to you. Unfortunately, we can only send these books into South Africa. The cost of just sending across the borders is just so expensive. We sent some books, some material recently to someone who is in Australia, and that cost was just below 2,000 Rand, 1.8 it was. So you can see, it's not really, it is worth it, obviously, but from a winning perspective, if you want something, it becomes very costly for us to send it out to you. So we can only send to South Africa. However, if you are out there and you are looking for these resources, let us know. We will send us an email, and our email address is hello@thetjtribe.com. You can send us an email to say, hey, I am in Australia, New Zealand, I'm looking for these resources, guys, send it to me. We will send you a separate quotation. So we'll give you the price. We'll almost give the books for you for free. And just you can pay for the courier to wherever you are. The second one is that property demand and prices. Obviously, with a higher mortgage cost, it can discourage potential buyers, right? So there'll be less and less people who are buying with fewer buyers. And obviously, the demand for properties may drop. So if you're in the buy to flip, it almost doesn't exist at this time. That strategy doesn't exist. This could also lead to what we call a slow price growth and even a decline in the property values itself. So if less demand just means that thing that we're talking about is going to have a less value. It makes sense, right? Higher demand obviously means the price will skyrocket. The other thing that we can think about this, my good friends, is that the impact on rental yields. The impact of rental yields. Over the years, we have seen many people living longer with their parents, and they stay in a back room, they're staying in a spare room, they are staying in a room that they grew up in as a teenager, and now they've got a wife in that room. I don't hate on those people, but I always say as adults, we need to make a plan, get out of that space. The best way of you to making it in life is leave home. If you leave home, you have no comfort. You're going to make it. I left home at a very young age, and I've made it. I've got a family. I look after my family. I foster for my own family. Nobody is helping me. I do that by myself. So if you leave home, leave the comfort of your home, you are going to make it. So why am I talking about this, my good friends? I'm talking about the impact on the rental yields. So obviously, if the demand is less, the rental yields is going to be less, right? The people cannot afford. So in the other instances, where there might be a higher interest on the money, there's more people who can't afford to go and borrow. So for that reason, we may also see the difference of more people wanting to rent, right? So the demand of rental could be high. So it just depends on the market here. If you're in property investment, at some point or the other, you've had to evict someone. And I know, my friends, it is a painful exercise. But I'm here to tell you that for the last couple of years, I've been using a company that is called Expello. Expello, basically what they do is that you pay them a monthly fee, and over and above that, whenever you get a delinquent tenant, they will come and evict that individual free of charge, because obviously you've been paying, right? And over and above that, you don't have to do anything. But guess what? I have managed to organize a good price for you. And the link here that you're seeing, which is called expello.link/TJ Tribe, gets you a great discount from Expello. So my friends, don't be caught with your pants down on your tenant. Just Expello them with Expello. It is TJ. Let's go back to the video. But in short, my good friends, the shifts in the investment strategy is called for. So if the borrowing cost is rising, some investors might choose to shift their focus from property investments into other asset classes that might be attractive at that time. And that's why we say here at the TJ Tribe, our strategy is real estate. But it does not mean that real estate is the only thing that you can do. There's plenty of things that can be done. As I land the plane, while property investment can still be a profitable venture, interest rates, my good friends, it can generally mean that higher costs for financing, that's number one, potential slow property value growth, which is number two, and which can obviously affect the overall returns. So investors need to factor in these changes when planning their investment strategies in a rising rate environment, and we have seen this. So the short way we can put it across is, whatever you're buying today and you're considering a 10% interest, I never consider 10% interest when I'm buying. I always consider a prime +2 +3 on whenever I'm buying, because I'm already cushioning myself for that 3%. So if my interest rate that I'm getting at the bank, to this, just a tip, right? If my interest rate that I am getting today, right, is 12%, I'm assuming 12%. So that's prime +2, right? It's 12%. There's examples, right? Assuming prime is 10, I am getting 12%. That was my last bond. I always make an assumption. If I'm buying a deal, I'm going to say 12% +2. So I am saying that I'm giving myself a cushion of an additional 2% if the interest is to go up. And that's what I am going to pay my bond on today on that when I get that deal. So I'm going to assume that there's a 14%. My deal works on 14%. And from day number one, as I pay off the bond, I am going to pay an interest rate +2. And that obviously then it's additional income that I'm putting on the property, so it's a saving for me. But I'm also chipping away slowly the capital on the interest, which also then reduces my entire interest spend on that property. And if the deal can carry it, my good friends, that's a good strategy to do. So I know that many people are always asking me, TJ, what are some of the other strategies that you use? Depending. We don't have like one answer for all, but here we are. I'm just sharing some tips here on how we do things differently here. So that is the impact on interest rates, hikes on property investment in South Africa. I hope I've been of good value to you, but don't go away. Remember that we are in the month of March and we are giving away this book here. And if you have to comment March and give us the comment in the comments, ask a question, add on to what I've just said, subtract for what I've said, and collectively we can all learn. Remember, this channel is built on you who are giving us the comments so that we can be able to become clever collectively. So until we see each other again here at the TJ Tribe, happy investing.